Your Partner in Success Radio is a free business podcast with host Denise Griffitts. It's all about great stories, conversation, and context to help you move your business and life forward with actionable tips and advice from her guest experts. To listen and subscribe, just find us on iTunes, Google Play, or wherever you consume your podcasts.
Good morning and welcome to Your Partner in Success Radio. I am your host, Denise Griffitts, and today I'm joined by Jonah and Jeremiah Dew, the banking bros. They join us to discuss the infinite banking concept, IBC. Now, unfortunately, Jonah could not make it today, but Jeremiah, also known as J. Dew, is here, and he will share their personal journey, explain the save and spend strategy, clear up misconceptions, and reveal how IBC can help you transform wealth building, cash flow, and family legacy. So if you have ever wondered how to keep your money working for you instead of against you, this conversation really is a must listen. And today we are sponsored by my very dear friend and co-host of the Closers Inner Circle podcast, the legendary Ben Gay III. Ben is the author of the sales classics, the Closers series. They are often called the most powerful sales books ever written. And for more than 50 years, he has trained, mentored, and inspired the best of the best in the sales profession. So if you want to sharpen your skills and learn from a true master, head over to Ronzone Books on eBay and grab your copy of the Closers. Now let's turn back to my guest, Jonah Dew, known as J. Dew, and these real-life brothers, and he'll share what they do. These real-life brothers practice and teach the infinite banking concept, or as I mentioned, IBC. Their work is all about helping families keep compounding interest working for them at all times so they can finance everything they buy without losing control of their money or becoming dependent on the market or taking on unnecessary risks. So today we're going to talk about what infinite banking really is, what it matters, and how it can completely reshape the way you think about money, cash flow, and as I mentioned, building a family legacy. Good morning, J. Dew, and thank you for joining me. Listen, before we get into the heart of this conversation, I would love for you to share your story with our audience. Who are you, and what inspires the work you're doing today?
Denise, thank you so much for having us both. Sorry, I'll speak for Jonah. He's not here on our recording here in the podcast conversation, but I am the older brother. I'm smarter anyway, right? I came in first into the game.
Yeah, I'm the
Yeah.
oldest in my family too, and I always tell them I'm the boss.
There you go.
Definitely
They
didn't
know.
work, but we try.
They know.
Yeah.
Well, yes, thank you so much. So our stories start with a family mindset that was, hey, we can't afford it. That's really where it starts. So when we talk about infinite banking or the save and spend system and having guaranteed lifetime income and options, it's not coming from a place of smarter than you. It's coming from a place of, I wish I were. You know, we were thinking as we grew up that it was haves and have-nots, and we didn't realize it was know and do. You know, it was more of that than it was for people who already had a silver spoon in their mouth. So my story starts probably around the time that I'm getting out of college. And I do have a 4-year degree. It's not in finance. I'm not a finance bro. I am a banking bro, but my mass communication degree didn't teach me anything about business classes. And in 2007, when I was finishing school, I was amongst the people who were taught by a generation of teachers in the age of boomers and maybe even Gen X, older siblings and things like that, that were telling us that big business and white collar was the way to go, and that your college degree would get you somewhere for sure. But unfortunately, 2008 was the year after 2007. So Denise, my story started with just trying to pay off school debt, realizing that the world has changed, and I've got cousins and little brothers and neighbors who are making money off YouTube. What is this? You know, when they told me I'd never have a calculator in my pocket in school. So it started like that. And some of the conventional ideas of not borrowing or over leveraging yourself with consumer debts was the only thing that I knew. And several years into my working career and then my entrepreneurial career, because I was like, wow, the JOB is not going to do it for me. It must stand for jump over backward or something for these people.
Oh, it does. Trust
Right?
me. I am unemployable. I've made sure of it.
You know it. So what happened after that point is somebody introduced what we now understand and became clients of, the idea of utilizing the infinite banking concept. And this was completely foreign to us. So for the last 7 years, we've been helping people with that concept and sharing the message of what's guaranteed to grow in cash flow.
I remember our pre-interview. It was some months back, and I'm sorry it took you so long for me to get you here. But I remember asking you in the pre-interview, what the heck does that even mean?
Well, heck, I was with you. When someone first introduced it to me, the only reason that I paid attention was the man who I was associated with had at least 100 rental properties in my area of the woods in South Carolina. And this was a guy who did not look like me, did not sound like me, but he had money and I knew about it. And so when he said, you need to become the bank, I was like, oh no, well, that's the reason I'm broke. I don't even know what that means. I've got a debit card, a Visa card. Does that count?
Right.
I was
I
like,
remember
what?
having this
Yeah.
discussion with you guys
Yeah. I was
going,
like, you
explain
got
it
it.
to me
I was like,
because it was
what does this
so,
mean?
yeah, it
And
was
so
so
most
foreign.
people, yes. So most people, Denise, are not familiar with banking as a verb. They know the place on the corner by CVS and the Waffle House down on the corner that they put their money in as a noun, the bank, but they don't understand and don't realize they can completely control the banking verb in their life. And because the building on the corner with the nice manicured lawn and the security guard, because that building controls the banking verb in all of our lives, we stay in a perpetual situation of paying interest to third parties. And I did not understand what that meant. And if you can just recapture what you normally pay out in home mortgages, in cards, in car loans, in personal loans, if you can keep it, if you can be the banking institution in your own life, you will keep your money. And keeping your money, turns out, is a very wealthy game to play without investing a risk.
How? Tell us
There we
how.
go.
Yeah,
How?
I need to
Tell
know
us.
more.
There we go. So what it turns out as the secret sauce is something that is the oldest financial tool in America. It's the oldest one. It's the one that has stood the test of time, and your bank owns more of this asset and uses it as a tool than any other thing they own, including their real estate and business holdings. It's whole life insurance.
What?
Yes, that's what I said. I was like, whole life insurance. I don't want to die. I thought we were talking about wealth building, you know? And so it started out with me trying to figure out, well, I don't want to die. And Dave Ramsey, right? I had paid off my debt and listened to him on the radio. Dave Ramsey told me if I bought whole life insurance, I'd go to hell or something, right? So now I have to die and go to hell. Oh, I have to sell my soul to the devil or something. That's the secret. And that's why I didn't know. Well, turns out none of that is true. Ladies and gentlemen, and Denise, whole life insurance is a guaranteed asset outside of Wall Street and outside of the government, where the insurance company must pay the Griffitts family. They must pay. If you give them a little bit of your money, premium, they pay a lot of money, and it's the only type of insurance that has a claim every time. Whole life insurance lasts your whole life. So unlike
And
car
until
insurance,
you're gone. That's
yeah,
when they
so
pay.
they have to pay, and they know that. So
Okay.
it's priced differently, and some people are concerned and worried about that. We can cover that if necessary. But what happens if you buy something, not rent it, that it'll go away? Term insurance or car insurance, only if. But if we buy it, death benefit, a guarantee, a payout. If we buy the coverage, then there's an ever-increasing pool of equity all the time. Cash value. Cash value is equity in whole life insurance, and it's liquid, and it's income tax free, and it's unrestricted, no questions asked. So I have an ever increasing pool. If I use real estate terms, we normally get it. If I have an ever increasing pool of equity that must come my direction and it's available in liquid all the time, then I can save my money and I can spend theirs, the insurance companies, the pool of money that's growing that I bought from them. I use that instead of a traditional bank, and I definitely don't borrow money from third parties, so I have to pay them interest. And I'm going to use that for my needs, my wants, and pay off my debts with it. It changes everything.
Okay, you ought to see my face. My eyebrows just hit my hairline because now I look like I had a bad facelift. I'm confused, but I think I'm starting to see the light. So when you say buy whole life insurance, how big a policy are we talking about?
Whatever you want. See, when I
Ah,
think about a bank, let's go back to a bank for just a second, but we are going to switch hats from bank and insurance and bank and insurance. So I know it could be confusing if you're not seeing visuals, and we have those and we built those for people. And we, of course, walk people through this conversation all the time. But let's go back to the idea of a bank. When we put dollars inside the bank on the corner, well, heck, we don't even do it, do we, Denise? We have our boss put the money in there for us. Account, routing number, and say, hey, you go ahead. Don't hand me checks at work. I'll look sus, right? I'll look cringe in front of everyone that I'm only here for the money. You go ahead and place that dollar in there every other Friday, twice a month, and you put it in that bank. That bank is how now houses our dollars. So you asked me the question, how big of a policy do you buy? Well, you just put your money in the bank. It buys you whatever services the bank offers. So if I make $100,000 and you make $1 million, I put the money in the bank. We both have an account. We both have access to what it does. Well, if I put $100,000 and you put $1 million inside whole life insurance, it buys whatever the death benefit would be on me. It does depend on my age. It does depend on my health. But now I've bought it, and there's an ever increasing pool of liquidity or cash value, equity, that I can use. So your number may be different than mine. I'm not buying a pre-described or predetermined policy, Denise. I'm putting my money in, and they'll tell me how much insurance that bought. I'm just going to utilize the equity.
okay. You ought to see my brain. My brain is just
Mm-hmm.
going zit, zit. Okay, so let's say I buy $100,000 policy just for that.
You said it again. The question is not how much policy you bought. The question is how much did you give them? They'll tell you how much policy that bought. You can give them any amount of money you like.
That makes sense.
There you
So,
go. There you go.
so how often can I pull equity out of it?
Well, just as often as you want to, because equity is liquid and ready to roll. You control and own the policy, the peace of mind, the pool of cash, right? I grew up Baptist, so everything has to be alliterated. So we have the policy, the paperwork, the pool of cash, and I can go get equity anytime that I like for whatever reason that I like. There's no limits, no restrictions. I'm in charge. I own the policy.
So what happens if you draw it all the way down? Do you start over or do you just keep topping it up?
See, that's a great question. And the reason that it is, Denise, is because when I draw it down, I'm not withdrawing anything. When I draw it down, I am borrowing the equity. My money, your money, is still in the system. We're borrowing against the equity like our mortgage. We're borrowing against how much of our policy is paid up, paid off, or paid for. We're not taking our money out. We're leveraging against the bigger amount of death benefit or policy that we bought.
Well, that makes sense. Now, I have to ask you this. Can you share your journey into IBC as brothers and
Sure,
how it's
yes,
shaped your lives? Because I've
100%.
looked at you guys, I've watched your videos, I've been paying attention, and you guys know what you're doing. No question about it. Even if somebody like me says, what? What are you talking about?
Well, what's beautiful about that, Denise, is the evolution that we've gone through in 10 years of practicing this ourselves and 7 years of helping people all across America do it. So thank you. The reason that you think it looks good and sounds good and feels good on the internet is because you weren't around day one. I don't know what I was thinking and telling my mom when I first saw and discovered what was true and could happen every time. So thank you for that. Our journey became that we read the book, the Bible, And the authority for the infinite banking concept comes from one man, the man who coined the phrase, R. Nelson Nash. So if you go to Nelson Nash's book, it's called Becoming Your Own Banker. The 5th edition with the black cover is the best version of that. And what he discovered is that this always was there. Once again, you cannot invent a concept. You can only discover principles and discover something that was there. And after 30 years or so of selling life insurance, he realized that whole life insurance actually worked like a bank better than any other tool. And he realized that you or me could leverage the guaranteed liquid pool of increasing equity or cash value to finance things. And the reason he got into that is because he actually was inside and upside down in a real estate deal so bad to the tune of $500,000 in 1980 when interest rates were crazy. And he was praying and trying to figure out what he could do to get out of this mess. And the problem was he was looking at this tool the way everyone else had looked at the tool. And they weren't looking at it as a banking system, a leverageable asset that they owned. They were looking at it as a legacy for their grandkids. That's the only thing they looked at. So
Well,
because of
and
that,
that makes sense. I mean, it really does, because when you think, as I have done, whole life insurance, you're not thinking you're going to get a penny out of it. It's going to your heirs.
you are exactly right. There's 2 reasons for that. Number 1, people don't understand and leverage the cash value. Number 2, they don't put any money in it. If you don't put any
Uh-huh.
money in it, then you're not going to realize that there's cash value equity that you can take. So I'm over here dumping money in after that because I realize that there is an opportunity for me to save my money in a place that has guarantees growth, liquidity, and no investment risk. I know several of your listeners right now, and every time I speak, thought somewhere in there that there's some sort of risk, some sort of downside. There's not. There's a guarantee that they must pay a multiple. So I don't risk anything. I store my money in whole life insurance, and I leverage and borrow against the increasing value of it all the time. And so I started doing that in 2016. My brother did shortly after me as well. I'm 32 at the time, and I realized that I need to put as much of my money as I can because I had previously put 100% of my money in Wells Fargo and Bank of America. I needed to put as much money as I could inside a place where it bought you all these benefits. At the bank, putting my money inside USAA as an Army brat, if I put money in there, it bought me a debit card. That's all it gave me.
Oh, you're kidding.
Well, that's what it gives you. That's what it gives the next guy. You get
Well, that's
access.
true.
Yeah,
Yeah.
you get a debit card. You even have to pay for checks, Denise. They charge you for the checks. They give you online banking, which makes it very convenient, of course, to pay bills. But they give you a debit card. That's it. But life
Mhm.
insurance companies give you guarantees, access, privacy. They give you passive growth. They give you a legacy for your grandkids and the ability to be able to leverage money anytime you want.
You know, that really is amazing. And I'm looking, I just opened up my checking account while we're talking and went, how much of that needs to be moved? And I
There
think,
you go. See, now you're
goodness,
thinking. And it
I
is, yeah, it is
am.
a process. It is a process for people to quite understand what's going on because it's a paradigm shift, isn't it? The bank is now, you're like, is the bank really my friend? Is the bank really doing that? Now, remember, Denise, the bank is taking all the dollars that you and I save there or put there, and they're lending it out to us.
Oh, yeah. Yeah. At
So they're
rates
making
we can't
profit off of it.
afford.
Yeah.
Right.
So see, banking is a verb. What the bank does is they take all of our money that we gave them on payday and they lend it back to us, our coworkers and our family members. Everybody on
That's
our street owes the bank. Now, everybody on your street and mine, all across the country, put 100% of their money in the bank, and somehow we all still owe the bank money today. But they already have all our money.
See, now I'm just going to have to cry.
Yeah, so don't cry forever. Like let's
No.
obviously let's make a move. When we know better, we can do better, right? But we didn't know better. We didn't know.
I wanted to ask you, do you have some real world examples of how the strategies worked for families? Maybe some of your family members or
Yes,
entrepreneurs that you've helped?
you know what? It's really crazy. I'm going to be kind of specific because I just got off a call this morning as we have this conversation. My brother and I got off the phone. We have a third brother who's not involved in the business with us. And we just got off the phone with his family. And they're wondering about utilizing this system and buying insurance from somewhere else. So they don't live in the same town. And so without getting into the specifics, we're going to hashtag protect the wealthy around here because it's private. Nothing to see here. It's only what people want to reveal. But most of the time, we are helping people actually with one of two or three things. And one is actually debt. Most people do have consumer debts and they're paying the credit card companies 15 to 30%. And we're actually going to buy money from the insurance company, right? Get a policy. We're going to put our money in, buy a big death benefit, and start to utilize cash value growth as equity. And we're going to pay off our debt with it. So many people actually need to get out of crippling debt situations. And when they do, we're going to be able to use a private growing asset. And one day when we're out of that debt, by changing that outside third-party interest that's going to leave us and go out forever, we're going to own that debt personally in a private asset that keeps growing. We're now going to be able to pay off our debt and still have the asset growing. I didn't lose any of my money. My money's still compounding because they let me borrow cash value, but I'm out of debt. So that's one thing. Think about it, everybody out there. And then the second thing is obviously investments. A lot of people, are trying to get to the place where they are trying to, make their way in the world, in the market, or they're business owners, and they need to have control of capital in a better environment. So they do this for that. And the third thing is just, heck, maybe it's a college thing. Maybe it's some sort of a loan that they're going to need on a big purchase in their future, like a car and things like that. So we're utilizing a private family-owned system to be able to finance whatever ideas they have.
And I can hear the skepticism coming from the audience. Now, I was not skeptical when I talked with you guys the first time. I didn't understand it, though. I do have a better understanding of it now because I've been watching you and we've talked a few times. But how do you handle the skeptics who say, oh, it's just too good to be true?
Oh, well, most of the time skeptics don't call, so I don't have to handle them. But
well, in that case, never mind.
You're right. No, but see, many of us do need some time to have a paradigm shift. Because if you and I are going to buy a new car and look at insurance, and we're thinking of it from that lens, we're just trying to find whichever, the Gecko, the Geico, the General, and the Duck. We're looking at those three and we're saying, who can I give the least amount of money to cover the cost? And that's not how I look at a bank. How I look at a bank is I wish my accounts were bigger. So I wish that I had put more money. I wish I had more money. Heck, Denise, I wish you and my grandma on my birthday put more money in my banking system. Insurance, I typically try to put in the least amount as possible. But a bank, I want the biggest accounts. So we have to have a complete paradigm shift on what we're doing. And if we put dollars inside a policy, we're also now comparing policies. And I say, hey, well, a term life insurance policy is not the same. There's no equity when you rent your apartment. There's only equity if you buy the building. So we're going to use the cash value as equity because we bought it rather than rented it. So term will expire, it'll go away. So there's several different notches that need to be clicked, right? As the key goes in, it just triggers this piece, that piece, and this piece until there's a domino effect where someone goes, now I can't unsee it. But it does take a little bit of time for many people.
Yeah, and it's taken some time for me as well. And I like to think I'm, fairly intelligent until I come across something like this that I'd never heard of, and I have to really unpack it. And that leads me to my next question. So, what mistakes do people make when they try to implement this without guidance? Because I've already made up my mind. I'm not doing this without guidance. I'm very interested in doing it, but I am not going to run out and buy a big old policy and then go, oh, great. Now what?
Very good question to ask. I'm so glad that you did. For all of us out there who think this is an off-the-shelf whole life insurance product. Number one, whole life insurance is a proper noun, so put some respect on it and give it a capital W. When I say whole life, it did not say universal. I did not say IUL. And many folks on the internet are claiming that that is the ticket product, and that is a different product that has different guarantees and different bells and whistles. So when we're thinking about insurance here for life insurance, we can think about it like car insurance, is that, hey, I drive a Ford, but Denise drives a Ferrari. So we probably got our insurance at different places, and I've got towing, you've got comprehensive, I've got liability, you've got OnStar, I've got AAA, you've got a safe driving discount. We both called it car insurance, but it's actually different because there's way different riders and bells and whistles and options. So don't think that this is an off-the-shelf product. It's going to be a custom contract from a mutual insurance company. Now, many of us could even name insurance companies that have mutual in the name, but we're going to go from a stock company, 750 in the North Americas, down to a mutual company. We're going to eliminate 90% of all companies because we want to participate in the growth and the pool sharing of the dividends as well. It only makes our policies operate better. So we're going to have a custom contract one from a mutual insurance company, custom whole life from a mutual insurance company that pays dividends. And then we're going to purposely pull on the riders that I mentioned, the options that a car insurance might have that we all know of, but we tend to not realize whole life insurance and life insurance works the same way. So we are going to get a certified Nelson Nash practitioner. My brother and I are both in the fellowship. They call them practitioners there, where we have been certified to teach people this concept specifically and to help them do it. We're also not going to buy a product and run away. Banking is a verb, an action that Denise is going to do for the rest of her life. Banking has always been a part of her life, and maybe she's just opening her eyes to it in late 2025. She's never controlled banking before.
No,
So we're
I
going
never
to,
have.
so we're going to help you do it. We're not selling a product here. We're actually going to coach you through the process of being the bank. Denise has always been the worker. She's always been the depositor. She's always been the person who takes loans and takes risk. And she's always paid those loans and risks back with her money, paying interest. She has 4 jobs, but there's a 5th. It's the banker. And she's never been the banker. Now, the banker's the only one that gets rich. Even though Denise did the work, put the money in, takes the money out, borrows it, and pays it back with interest. That's 4 jobs. The bank always got rich off of her. So there's one job she needs to add, just one, and we're going to help her with it, coach her through that. So it's not a product that you buy. Once you get the right product, then it's a process. Get a coach for that.
And I'm glad I asked because, I mean, I can tell right now people listening to, I can go do that. Don't do it today. Just don't.
I'm telling you, there's many people that we've discovered over the course of many of our social channels who've seen us sing the praises or say 1 minute at a time and all these small bite size and, maybe poorly contextualized pieces that you might find who come back to us after a year, after 2 years. And they say, well, I went to my cousin, I went to my uncle, I went to my regular guy or gal, and now I'm not sure I got the right thing. And now I don't know how to use it, and they don't know either, and they didn't tell me. And so we end up, fixing problems or saying, yikes, you got close, but not close enough. We might need to start over. Or they say, well, even if I got it right in the product, which is rare, they don't know how to use it. They can't be the banker because they just never have been in that seat before.
And listen, when you're dealing with an insurance, and I live in the deep South, I mean, my roof gets torn apart every now and then with hurricanes.
Mm-hmm.
It's not fun. And there's always going to be piles of brown stuff that you step into without even knowing it. So
That's exactly right. So it happens all the time.
It does,
we still love you and we're still going to help you. But many people can just avoid that by going to a source like the Banking Bros who have been talking about it. Like, why would we go elsewhere to try to find something that we know where we heard it from or we know who does it well or right? We should probably just do that.
Exactly. And Dew, you put a lot of emphasis on family legacy. So why do you believe financial education across generations is so important? I think I know, but talk to us about that.
Oh, that's such a great question. And many people do love their families, but because we weren't taught this in school. School taught us how to fill out a ballot card and even said, if you fill out the wrong one, you have bad morals. And that's not the financial education that we should have gone through. In my era, I was taught to balance a checkbook for a week in my junior year. Turns out the moment I graduated, that was unnecessary. And it was only a week of training. So what we are going to do and think about here is making sure that our family members have a growing income tax-free pool of money to utilize for their whole life, and that when we die, let's stop saying if when it comes to insurance. If something happens to us, well, something's going to happen. We can't make it out alive. I don't even want to live that long. My elbow and leg hurts now. So when something happens to us, our family can afford to show up to the homegoing service, to the family reunion, because there's a check waiting for them. Family legacy is not just money, but it's getting everyone together to be able to talk about the good things, to have time to clean out the garage when you're done, to be able to afford to take the kids to the service to see their cousins because you have enough. We've left it, and we've also talked about that. If I die today, I would never leave the keys to my car to my daughter. She's 11. That would not be a blessing. She's too young and too small to drive and to understand. But if I can have the conversations with her now at an age-appropriate level, if she's 11 or 21, we can be prepared for the inevitable. So I think this is an act of love to be able to not just support the death benefit part, but to have a conversation about cash flow and about controlling the cash throughout our whole life.
And you just led into my next question. What kinds of conversations should parents be having with their kids right now about money that they're often not having? I'll be honest with you, my parents didn't talk to me about money at all.
Right. And we love our parents and they're good people, but so many of them did not have the education or training to talk about it. And it was a taboo or gross subject like religion or politics or something like that. But
And I
that's
think
not
they
what it
thought
is.
it was their business and nobody else's, honestly.
And it turns out as we get older, and as some of us are in the sandwich generation, taking care of family members, taking off work, and like I said, not being able to really afford to grieve well. We don't have enough money and time to grieve well. We realize, no, it's not just your business. I'm a part of a community, and one of those communities is my family. So this is how I suggest we talk to our kids. Let's assume that our kids are not of age at this point, and our kids are minors, right? So my kids are minors, but we have some tips for adult and grown children as well. What I'm going to do is I'm going to say that there's always enough. We're going to have an abundance mindset. Remember, I have a policy where my cash value always grows and gets bigger no matter what happens, no matter what the market does. But I'm always going to say there's always enough. We need to be resourceful. If we don't have enough resources today, we just need to be more resourceful. We need to be helpful to someone else so they exchange our time, our consideration for money, maybe. We need to have better skills. So we're going to do more, and we're going to act better, and we're going to be nice to mom so she'll give us a couple extra dollars. So you can have those. My kids are 11 down to 3. And so we're going to have those conversations about being helpful, about being a value creator. We're going to create value and good things for other people because they like to exchange that for money, and that money is what we use at the store. So those are one of the questions that we're going to cover and have conversations about when we talk to our younger children. And then as our older children get, maybe they're of age and they have children of their own. Many of us are in that category. One of the things that we offer and help facilitate is a family financial reunion. Let's do something on the computer. Let's talk about it and say, hey, I'd like to introduce myself. I'm one of the banking bros, and your parents, your mom, your grandmother has bought some money for the family that they're going to own and control. And we're glad you showed up to the call. We'll record it privately for your family because the family members who didn't show up, grandma told me she was going to write you out of the will. So I'm glad you guys showed up, right?
I knew that was coming.
If they come to a future call, we can, because we own it and control it, grandma can totally put the other grandkids, the other sisters and brothers' names so they can get a check at that funeral and the family reunion. So what we're going to talk about is how our money can grow in cash flow, how we can stop paying third-party banks, Sallie Mae, Fannie Mae, and the government, how we can leverage an increasing pool of liquid cash, income tax free for the family's needs. So if you need to buy a new vehicle, make sure you show up to Thanksgiving dinner, because after you clean the table, you can ask grandma for a loan and you can pay grandma back with the interest, replenishing the family resources and pool. And you don't have to give all the interest to Bank of America on the corner. And so the money leaves the family forever. And then, of course,
And
when grandma's
right.
gone, you recoup all of your money plus the growth and interest.
And I
Income
was gonna
tax
ask
free.
you about that too. And by the way, if you show up at Thanksgiving and you bring a can of cranberry sauce, you're not getting a penny.
That's
I'm just
right. That's
warning
right.
you
Everybody
right now.
knows. You better at
Don't
least, yeah, you better at least put some effort into it, and the mac
That's
and cheese.
right.
Don't go wrong. Yeah.
That's right. Okay, so conversations with family, and I think they are so important, but why are we as humans so reluctant to have these conversations? Is it the way we were trained? Is it because we think, I don't have enough to share, they're not going to care, or they're going to try to steal it from me? I can just think of 100 different reasons. What are some of the things that you find have you going, listen, it doesn't need to be like this?
You're exactly right. For 100 people, there's 100 different reasons why we might be apprehensive of that conversation. At the same time, there's many families out there, Denise, that are ready for that conversation. They're totally ready. And so it's like, wow, that's nice. My family was maybe like yours. It was a taboo subject because we never brought it up, not because we couldn't. And we didn't know that. So at the point at which 10 years ago, my brother and I started practicing these conversations, we realized, well, our family was naive and ignorant, not anti. They were interested.
Oh, good
We
good
never
point.
had anything to talk about.
Well,
So
and you
we're
don't
different.
know how to ask. You don't know
Yeah.
how to say, "Listen, I'm a little bit upside down in practically everything. I don't know who to ask for help. I don't know how to get help." And nobody wants to have that conversation.
They don't. And that's why a facilitation on a free consultation call, we call them cash consultations or family financial reunions if they're with you and your loved ones, we can help with that. And we can say, you guys get to make the decisions. You guys get to tell us your goals, your dreams, and your problems. But we're going to facilitate a great way to move toward guaranteed lifetime income. But you get to pick your wishes, goals, and dreams. It's not just a product. It's what you want to be when you grow up. So we're going to have that conversation with every family that's interested in that. And it's a beautiful thing to see those mindsets shift, paradigms change. And a lot of people and couples, of course, right, get on the same page once they're actually moving in the right direction together, whatever that direction is, but moving together as a solid unit, understanding the goals, wishes, and dreams of the next person. And maybe he's a free thinker and spender and a go-getter and a risk taker, and she wants the security of cash that's available because she doesn't know what he does and doesn't care. And so we're going to be able to solve that problem with the processes that the baseline product provides. There's always an increasing pool of cash. And if she says we are not going to spend anything until that pool of cash is X amount, well, now we know, no problem. After that, we'll go be crazy and invest.
Right, right. And I'm thinking, because so many people get married these days. Oh, they always have. It's not these days. It's just I'm noticing it more. They've talked about the wedding. Oh, well, our lives are going to be so perfect after the wedding. No, you need to get these things sorted out before you even get to that point. And I think so many young marrieds or even people who are getting married again for the second or third or fourth times have not handled their finances in a way that makes sense for the long term.
You're exactly right. I totally believe that and agree with you. And there's a better way. So we call ourselves coaches because we are able to obviously process the product and write the insurance, but it's so much more of a comprehensive idea from that. So we're going to be able to facilitate a great conversation for people. And we want you to be healthy and whole, and you live a much different life if you have a backstop of guarantees and a backstop of growth and a backstop of liquidity. You'll live a different life and you'll sleep better at night.
Absolutely. And one of the things that we all know about marriage, about relationships, about businesses, money is the big divider.
It
Always,
really is.
100% of the time.
It really is. And it's time to make sure that we can have a conversation, a healthy conversation about that. So we don't get ourselves or keep ourselves in a place where we just can't win.
Exactly. I wanted to ask you, if someone listening today is brand new to infinite banking as I was, what is the very first step they should take? And I'm telling y'all right now, if you're listening, don't go running out to buy whole life.
You are correct. So, number one, I mentioned that book. I'm not going to sell it to you. You can find it at a bookstore near you. I think it's called Amazon if you want to go there or listen to it. Maybe you're a listener
Yeah, I've heard of
and
them.
that's going to be helpful. So, you can do that. So, I highly suggest folks do that. And then, secondly, thebankingbros.com. So, if you'd like to see us in action, explaining this with visuals, if you'd like a free consultation call where nothing has to be bought, from one of our coaches, including myself, thebankingbros.com. We've got a link for you and we'll share it with you, Denise, and hopefully that can be shared with folks in the show notes. So you can learn the save and spend system, how to save and spend money at the exact same time.
That just sounds so odd. Save and spend, save and spend. Because
Yeah.
I think we get it in our heads that we have to save it, but we can't spend it.
Yeah. So there are assets out there, including the one that is the test of time, best liquid asset that your bank owns more of than anything else. I kind of alluded to that earlier. That is whole life insurance. And you can save your money and spend their money, the cash value, the money that you bought from them. And it does take a minute, like I said, to unlock maybe each piece so you understand it. But you need to do yourself and the next generation a guaranteed liquid income favor by taking a couple of hours to really watch and think.
And you mentioned age and health is going to, play some probably important parts of getting this insurance. Are there any age, does there come a point where you're in your 70s, 80s, 90s where you're not going to be able to get the insurance?
That's a great question. Yes and no. So there's a point at which, because of your age and or health, that you're not going to be able to get the insurance on yourself. But that doesn't mean that your spouse is of the same age or same health. That doesn't mean that your kids or grandkids are the same age and same health. And we all know that great grandma bought Gerber policies on everybody. Well,
Oh, yeah.
they didn't ask great grandma her health questions. She didn't have to pee in a cup when she's buying it on the kids. So if you are not healthy, you do not qualify, you have issues, that doesn't mean that your spouse does. So you can still own the policy, control the cash flow, even if it's not on you. So those are nuanced questions that are great. Everybody has them. Of course, insurance does care about the insured's health, habits, and history. But if that isn't conducive to you, we'll just get it on someone else in the family.
Now, what if you don't have family members who can do that for you? Can it be a friend? Can it be the executor of your will? Can it be somebody else?
Great question. Yes, it can. There are instances where it's not a family member. What we're looking for is someone that you may have insurable interest on. And what that means, insurable interest, is that means that at their funeral, you will cry because you lost money. So what that means is I'm not just going to cry. I'm going to cry at Beyonce's funeral. I guess I'll watch it on YouTube or something, but I didn't lose any money. But if they were a business partner, if they were a key employee or someone to that effect, then yes, there is the ability to own life insurance on that person, because when they pass and move on, you lose money. Remember what insurance is. It is covering a loss. And so that person may not be a family member.
So this could be a sort of key person insurance thing.
You got it.
All right. I'm smarter than I think I am.
There you go.
What what resources can people find at the Banking Bros to help them learn more and get started and not rush into anything? My watching you, listening to you, this is something you need to sit with a bit and understand before you just go, "Oh, I can do that."
You are absolutely right. So we highly suggest, once again, the resources that could include things like our Save and Spend System video. We've got a free video, 1 hour to the dot, that you can watch. We do live webinars and things like that if you end up opting into any of our free resources. But we've got video libraries. We've got IG, TT, YT, FB, all the platforms you want, plus LinkedIn. And we've got some great stuff to help you start the conversation. That the book, even the man who authored the infinite banking concept idea, he suggests you need to work with someone who knows how to implement what I'm talking about. And then after his passing, his legacy estate created the Nelson Nash Institute. So that's who we are. And we'd love to help you draw it out for you, or have a Zoom call or Google Meet with a financial family reunion where we take a look at things together.
I love that, and I'm heading over to Audible as soon as we're done to see if I can find that book. So before we wrap up, and this has been the quickest hour on the internet, it always is there a final thought or story that you'd like to leave with our listeners?
I would. There's a couple things. I'll go back to the source with Nelson Nash, and I'll say a quote. And this one was so interesting for me to realize. And he said this: most people don't realize that you finance everything that you buy. You either borrow money from some third party and pay for it with interest, or you spend down your own money that you had to save. So that's a cash person. Cash people actually have a tough time getting their head around this. That was me, a Dave Ramsey type of guy. But you finance everything you buy because you have to save up the money somewhere. I just didn't know there was more than one option to where I saved it. So you finance everything you buy. You either borrow from a third party and pay interest, or you lose out on the interest and what your money could have done. That's why we save it in whole life insurance, because we're not losing out on the growth, guarantees, privacy, and liquidity of our money. We're just borrowing against the value we purchased.
It's amazing. It really is. I mean, I remember during our first conversation thinking, I was skeptical. I really was. And you knew that because I was pretty clear about it. It's like, I don't understand. I don't have any filters, y'all. I'm going to tell you right now, I just don't. And you were very patient, both you and Jeremiah, and you're Jeremiah, Jonah.
Yes, right.
Sorry.
Mom gets us confused too, it's okay.
Oh, listen, I was the oldest of, 5 kids, and we were named Denise, Diane, and Debbie, and my mother would try to figure out which one we were, and she'd say, "Damn it, you know your name," and I'd say,
There
"Yeah,
you
but
go.
do you?"
There we go, right.
She never did. But anyway, thank you so much for being here and helping us better understand how the infinite banking concept, I'm losing my voice, can give families control, flexibility, and confidence. That's so important in building lasting wealth. And thank you so much, Dew, for being here. I really appreciate it.
Wonderful. Thank you for having me on and exploring the idea of a paradigm shift that can really solve a lot of people's financial problems. So keep doing what you're doing as our new partner now and everyone else's. Thank you.
Oh, my pleasure. And tell Jeremiah, you're Jeremiah. I keep doing this. Tell Jonah we missed him.
I will. Thank you.
Sorry about that. Well, listen, to our audience, I hope today's conversation sparked some new ways of thinking about money and legacy. We talked a lot about legacy. If you'd like to learn more, be sure to visit thebankingbrothers.com and connect with Jonah and Jeremiah on YouTube and Facebook, and head out, listen, spend some time over there on YouTube. There's a wealth of information. And as always, thank you for tuning in to your partner in Success Radio. Be sure to subscribe, share this episode with your network, and let me know what resonated with you the most. And until next time, I am Denise Griffitts, helping you build success by learning from today's top entrepreneurs, authors, and business leaders. Dew, thank you again so much.
You're welcome. Thank you.
Get your voice heard. If you would like to launch your own far-reaching podcast, contact Denise Griffitts at yourofficeontheweb.com and go to the podcast tab.